Hi, we'll see in this video about an important event that took place in the last 2 weeks in the stock market that has never happened in the history of the stock market. It's about increase in the stock price for GameStop. We'll learn about this company, and there's a huge increase, and it was unprecedented. Nobody expected that, and well, stock market prices increase and decrease, but why so important? You might have heard about it actually, or read about things on different newspapers, but I'm going to give you an analogy as to what really happened and why is it so important to understand this event, because it's not just another stock price increase. It's tells a very different story. Okay, so here is this chart I've taken from Yahoo Finance. As you can see, the stock price for GameStop is a gaming company. Well, it's a company that sells games and electronics and so on, offline, right? It doesn't sell online. Much of its business is offline, so in stores and all. A month back, in fact, before 11th of January, it was trading at somewhere around $10, and now it is trading even at 350 or something, right? For some time, it decreased to 200, then again went up to 325 more recently in the last 1 or 2 days. So there's a massive increase, right? Well over 1,000% is increase in just a matter of 2 weeks' time. So what has really happened for this company, right? We all know from finance that stock price reflect the true value of the company. That's not the case here, right? It can't be that the value of a company has increased by over 1,000% in a span of just 2 weeks' time. Very unlikely. So what has really happened? Okay, let's first know a bit about this company. It's not a new company. First of all, it's a company that sells video games and consumer electronics offline. So it has stores in different cities in the US and Europe where it sells video games and electronics. It was founded in 1984, long back, so it's not a new company, in Texas, and its revenue in 2019 is 6.4 billion, which is by US standard. It's not a very big company. It's a medium-sized company. It's not even a tech company. Net income is about yeah, as you see here, it's a negative. It's like it has incurred a loss of 470 million in 2019. So that's not very impressive. So it's not making money. It's a loss-making company. And as you see that, a month back, its stock price was somewhere around 10 US dollar, which says that nobody really believed that this company will do well in future because of the losses that it has been incurring in the last few years. In 2019, it incurred a loss of 470 million. It operates across the globe. It's based out of US, but it has large operations in Europe as well as in other countries. Its stock price was just about 5 US dollar in 2019. In 2013, it was about 45 or 50 US dollar. So from 2013 to 2019, over a period of 5 years, its stock price has plummeted from $50 to $5. So huge decrease over a period of five. What has really happened in the last 1 month? That its price has gone up to somewhere close to 400 US dollar. What has really happened? Okay. So in on January 11th, there was a small increase in the stock price. I think about 10% or 20% increase in the stock price, and the reason was that there was a management change. So people thought, okay, now it's a better management. It's able to perhaps able to. It's probably going to make more money. Hence, there was an increase in the stock price. Things changed after a couple of days, that it increased by another 20%, 30%, right? And what happened was that the increase of the stock actually gained a lot of attention. It was covered in many newspapers, in Bloomberg, in Wall Street Journal, Reuters, Economist, BBC, New York Times, The Guardian. You name all the top international brand, it was covered that there is a huge increase, about 20, 30, 40% increase in a very not so well known company, but it's a medium sized company, and that got a lot of attention from all kinds of people. And a lot of people thought that this company is quite undervalued. Why? Because during the pandemic, gaming is booming, right? All the gaming companies are doing well. Tech companies which are into gaming are also doing well. So why is the stock price so low for such a company which has been there in the market for very long time? So people thought, okay, it's an undervalued company, so they started investing, and the stock price started increasing like anything, right? It increased even more than 100% in just about 4 or 5 days time. And what happened after that? Well, what happened after that was some of the hedge funds. Hedge funds are basically private funds. These are not banks. These are people or companies that manage money of rich people basically, right? Or upper middle class people. People have lots of millions of money, millions of dollars. So they give these private invest companies to manage money, and that they're basically the hedge funds. These hedge funds took a bet against by selling short, and I'm going to talk about what selling short is. So these companies thought that, the stock is very overvalued now that it has increased by more than 100%, and it is sure going to decrease. There will be a market correction where the price will go down. And the reason is simple, that the company is not making money, it is at loss. So it's very likely that the stock is very overvalued, and some hedge fund took um, bet against it by selling short. Selling short is simple. You borrow stock and sell to someone else, and you go on a contract that you will buy the stock at a later period when there will be a correction, um, and you think that the price will drop eventually in the future, and but thereby you will make money, right? Because you sell the stock, let's say at 100 US dollar, thinking that it will become $20 after 2 weeks time, and when you have to sell because of the contract, you'll be selling at 20. That means you make a profit of $80. So that's the concept of selling, and you don't need, the interesting thing that you do not need any money to do that, so you can do it without having any money, right? So selling short is therefore sometimes is misused or by some of these players. And what happened after that was that, so here is this Reddit group. Reddit is a social media network where in there's all kinds of group, but one of these group is the Wall Street Bets. These traders, the day traders who actually invest, not invest, actually they trade on a daily basis. So these traders actually learned this, and they knew that some of these hedge funds are actually betting against them. So what they did was that they actually poured in a lot of money into this stock, so the price never really dropped. So there was no decrease in the price of the stock after that. So the hedge funds were thinking that the stock price will decrease eventually and they will make money. But because of these traders continuously giving importance to that, or trading it on this particular stock, the stock price never decreased. What happened after that was that the hedge funds actually lost a lot of money, because they had to oblige with the contract, and they have to sort of sell the stock, and the stock price is not decreasing, it's still at the high, it's quite high, in fact higher, right? What has happened after that was, instead of 100% or 200% increase, it actually has increased to 1700%. That means a lot of these hedge funds that took bet against the stock by selling short are losing a lot of money, so much of money that some of the hedge funds are at the brink of being bankrupt or losing everything they have. So that has happened. Now this is interesting because this is the power of social network, where people come to a group and take a decision. They can sort of, I mean, the market movements are so artificial, they're not natural movements, right? So some of these financial instruments that can actually work in sometimes could completely go wrong, because a bunch of people on a social network, social media network, they want completely different, they have completely different view of the market. And that's what has happened, and what we have learned in this case is the role of social media in capital market. Well, because of the different news items and social mediums, and the fact that people can interact on a real time basis on Reddit or on Facebook groups, you can actually interact, right, with people on a real time basis. You can change things a lot. So role of social media is now quite huge. Another important thing is that the way Elon Musk is sort of helping some of these companies to um, uh, increase the stock price. Well, not the companies per se, but indirectly. um, well, because of the tweets that he's making, with the single tweet with Signal. There's another company called Signal. It's not the WhatsApp alternative Signal, but there's another company called Signal, and its stock price increased because of his single tweet that he asked people to use Signal instead of WhatsApp. Now Bitcoin's price has increased because now on his profile you see hashtag with Bitcoin. So these simple things are now affecting the prices of the stock. So now in academic finance, you might have studied the stock price reflects the true value of the company. That's not happening, right? Well, we all know that it never happened actually, because there were always some level of speculations that was driving the market. But now the speculation is way more prominent because of the presence of social media, where traders or investors can interact on a real time basis and can, the herd mentality is now being so prominent because of the presence of social media, and that's what has happened here. And pricing versus valuations, nobody cares about valuation anymore. So academic finance has gone for a toss, because valuation talks about the real value of the company. You actually learn from the P&L, the profit and loss statement, the cash flows that's happening, the balance sheet. Look at the balance sheet and value a company. That's no longer happening, right? What's happening is now that how many people are ready to give more money for a given stock. If there's too many people, then the price of the stock will go up. So that's pricing. That's not valuation. You're pricing a stock, not valuing a stock, and that was is happening. It has happened to many other stocks, by the way. But with GameStop, what has happened is that it has, first of all, it has happened in a very short span, like in a matter of 4 or 5 days. There's some other stocks like Tesla and all, but it took a couple of months time for Tesla. But for in the case of GameStop, a lot has happened in just a matter of 2 weeks time. And second thing is that because of the involvement of the hedge funds, which by the way are not the best players in the market, are losing money. That's not always a bad thing actually for the economy, but that's also is happening now. And hence it's important to actually understand this event, especially if you have interest in the stock market. You can read more about it on different news sites. I recommend reading more on Reuters, which is a wonderful place. Wall Street Journal is another, where you can read more about what has happened, and learn a bit more about, sometimes, you'll actually, if you're a retail investor, you could lose money if you are into all these things, because day traders will make money because they're day traders, and hedge funds don't care because they manage money for millionaires. But if you're a retail investor, you could lose a hell lot of money in such thing. You could also make hell lot of money, but what's more important, that you could lose also hell lot of money. And that's why it's so important to understand this particular event.